Welcome. Today is Friday, August 4th, 2023. Welcome to another episode of Real Estate, Real Life, Real Talk, and Real Live with me, Damon the Agent. And I thank you for coming to me today. We are in the month of August. Time is always flying when you're having fun. So you all know I always like to begin my show with the latest real estate trends, topics, and subjects that you'll normally ask me. So today we're going to talk about how to sell your house using a reverse mortgage. And the reason why I'm going to talk about this is because I've been speaking to a lot of people who've been having, unfortunately, their parents pass away and finding out that their parents have had a reverse mortgage on their particular home. And they're trying to figure out what to do because in some cases, they didn't even know that their parents had a reverse mortgage. And then in other cases, people don't even know what a reverse mortgage is. So let me explain to you what a reverse mortgage is. A reverse mortgage is a financial agreement in which the homeowner relinquishes equity in their home in exchange for regular payments, typically to supplement retirement incomes, to do home repairs, or in some cases to cover medical expenses. It is when a homeowner has equity in their house and they really can't afford to keep making the payments. So they reach out to companies that do reverse mortgages, in which those companies tend to pay the homeowner, especially when they have equity in their house. Now, there's pros and cons to doing a reverse mortgage. Um, One of the cons is, and let me also share that when a person does a reverse mortgage, they have to be 62 years and older. Like if a person, let's say hypothetically, is under 62, the mortgage company will not allow a reverse mortgage because that is one of their guidelines. So, like I was saying, there are pros and cons to doing a reverse mortgage. I want to begin with the cons first. Now, one of the cons is the big downsides in a reverse mortgage is the loss of home equity because a person is not paying down their mortgage balance. And because of that, they're losing the profit that they would gain over time. So the tricky part can be if a person does a reverse mortgage, and typically when people do a reverse mortgage, they do it until the homeowner passes away. Now, the reason why I want to talk about how to sell a home using a reverse mortgage is because in many cases, when the homeowner does pass away, um, some cases they may leave their will in a family member's name, or they may relinquish it to a power of attorney, in which those cases it is easier to sell the property. But in other cases, when it is not, things have to go into probate, because here's what you have to also understand. The mortgage companies, of course, once they've been paying the the homeowner the payment for however long it's been, they're going to want to relinquish and get that money back and then some. So a lot of times, what happens is they're trying to get ownership of the property. Now, the pros for a homeowner when they have equity in their home and retirement is not enough. The pro is they receive a payment. They receive a monthly payment, in which by receiving a monthly payment, it helps them to pay other bills, and then they don't have to worry about paying the mortgage at all. I actually have a property that I'm putting on the market next week that also has a reverse mortgage, and I've already discussed some of these things with the person that it was relinquished over to, someone's daughter. Now, here's the thing that I was saying about the mortgage companies. What the mortgage companies are always trying to do, remember, they're in the profit business. So when you're trying to sell a home that has a reverse mortgage, even though they will advise you sometimes, understand they're advising you from the perspective of trying to gain the most money from that particular house. And what I mean by that is mortgage companies are quick to tell homeowners or the loved ones of homeowners, if they pass away in a situation such as a reverse mortgage, they are quick to tell them to do a short sale, or this is what the balance is, so we can take it as a deed in lieu. Um, in most cases, I would not go with what the mortgage company says, because again, they're looking out for you. What you have to find out for yourself is actually what is the house worth. Because even though they're actually telling you to do a short sale, I know someone, the mortgage company told them to do a short sale, and they clearly have over $300,000 and $400,000 worth of equity. And he was asking, why would they tell me that? And I said, yeah, because if you do a short sale, they can get the property from you at a much cheaper rate. And then on top of that, what they'll do is turn around and sell it for a much higher rate, gaining all of that equity in which they don't want you to get. But if you listen solely to them, then they're going to advise you certain things. So they're quick to say, do a short sale, or quick to do a deed in lieu. We'll just take over it. And some people, they feel like that's the easiest route. And in some cases, it is. But as far as you gaining that equity, you making a profit, it is not. The banks are going to profit off of that. So I always would tell people that make sure that if you have a loved one who's doing a reverse mortgage, make sure that they clearly have a will with you as the power of attorney. And if they don't have a will, make sure that you are the personal representative of the estate, because you don't want to go through probate in some cases, because sometimes that can be lengthy and also costly. So, like I was also saying, the mortgage companies are always trying to profit by regaining the properties back. So, what they're trying to do is when you do a reverse mortgage, and then let's say if you're selling a property, what they're going to do is tack on late fees. They're going to tack on all this interest, because they're no longer making that profit that they thought that they were going to get. But here's another thing. Time is always of the essence. If a loved one has passed away and you decide that you're going to sell the property and they have a reverse mortgage, please do not assume that you can just live in it freely. And you know what I'm saying, even if the house has been paid off, but if a reverse mortgage was put on the property, that means there's a lien against the property. So that reverse mortgage needs to be resolved. And if you sell the property, the banks will get their money back. But understand, in most cases, if you say, oh, I got a payoff from the last statement of my loved one, and it said, I'm using this number for the purposes of clarity, they said your loved one owe 165,000, and you can sell the house for, let's say, 500,000. Okay, so you say, oh, okay, so between that, minus about 7 to 10% because of cost and everything. When you sell it, 7% most cases, but minus that, basically, what you're going to do is understand that that difference in stuff that you assume you're going to get, you may not get a lot of time, because even though you receive something to say 165, in some cases, because the banks know that you're going to sell it, because even before you sell the property, title companies have to order a final payoff. That balance would change from 165 to maybe 205 in a heartbeat. And you'd be like, wow, how did it shoot up that high? Because they've realized they're not going to get the money and profit that they assumed that they was going to get when the loved one of the who owned the home passed away. So now they see that it's being sold by a family member. So they tack on all of these fees. So you have to be clear in that. But time is of the essence. You don't want to wait a year or two, because all of those payments that they were paying, you got to understand the payments now that they were paying, it switches to what they were owing. So that get tallied on top of the mortgage balance. So because of that, even when you sell it, that mortgage balance is going to be more than what that statement is. And that's what's going to come with that final payoff with a lot of these companies. So you have to understand, banks are always in the business of making money. But can a property be sold using a reverse mortgage? Of course it can. Depends on the balance, depends on how much the house is actually worth, depends on the property has been put in a loved one's name, to sign off on all the paperwork. Now, you always have to do the numbers and do the math. And this is when an experienced agent and title companies come involved, because you have to have those things broken down. I say that to say, I was speaking with an agent this week, and she's dealing with a situation where her client has a reverse mortgage. She gave me the number about what she's going to put the house on the market for and how much is owed on the house, and there's all these taxes and stuff. So I said, well, listen, by the time you do all that, that's going to be a short sale, because the numbers are not adding up. So she was like, oh, you're right. I got to go back and look at some numbers again, readjust some numbers. And I said, yeah, because what you got to understand, that final payoff that's going to come from the bank and the mortgage company is going to be a little higher than what you assume it is, because they need to make some money and recoup some money from what they were paying. So they're not just going to go by the balance, even though the balance is added on to the balance when it started. They're going to make sure that they recoup some money. So they always tag on their late fees, their interest, and all these other, fees and costs that people are unaware of. But you have to do the numbers. Of course, a house can be sold doing a reverse mortgage. Please do not just allow it to go to foreclosure, because you could be throwing away money that you don't even realize is there. It's always good to talk to someone to know, because there's a lot of that going on as far as reverse mortgages. Because, let's just face it, some people need that reverse mortgage payment in order to supplement their lifestyle. But I just wanted to share that. Yes, you can sell a house doing a reverse mortgage. It's just knowing the steps that are involved so that, you can profit when doing that. So I'm going to be back in 1 second, because I'm going to have a lender, a loan officer come up, and we're going to talk about what's the latest going on in the mortgage world. Give me 2 seconds. Hold on. Okay. I see her, but for some reason, I don't know what happened. Okay. Michele? Hello?
I am here, Damon. Can you hear me? Because I can barely hear you.
Can you hear me now or no? You can't hear me?
Damon.
Yes, I'm here.
A little bit.
I don't know. Let me check my settings real quick. Because it looks
I
like
can. You're choppy. You're choppy.
yeah, everything seems to be working on my end. You want to sign out and sign back in? You think that'll work? Can you hear me? I don't
Do I
know.
want to do what?
I said, do you think you can?
I can hear you.
You can hear me now, or no? I don't know.
Yeah, you're just a little choppy. I can hear you, but you're choppy.
I don't know. Let me see
Okay.
if anyone out there can hear me clearly, because I'm looking at the settings. There's a way to test the audio and the video, and according to the audio, I'm getting strong readings on my end. So it may be on your end where you cannot hear me. Do you want to sign out and sign back in?
Okay, let me try that. Hold on one
Okay, yeah,
second.
do that real quick.
Okay.
All right. All right, y'all. Let's give her like 2 seconds and see what happens. Um, I don't think it's on my end, but you never know when it pertains to technical difficulties. So let's just see where we're at. Okay, hold on for 1 second. She's back. Let's see. Can you hear
It's
me
a
now?
little bit better.
So only a
Yes, I
little
can
bit
hear
better?
you.
Huh?
I
I
didn't
don't
hear
know.
you.
I don't know what to say. Hold on. Let's try this again. Let me see. It's saying
Yeah.
everything. Let me see. Reduce noise in the background. I'm checking the settings real quick. So
Did you? Okay.
yeah, I'm looking at my settings. You can't hear me. Do me a favor. Um, pull up your phone and see if you can
I
hear.
can hear you clearly right now. I can hear you clearly right now.
You can hear me clearly right now.
Right now, I can hear you clear. Mm-hmm.
It's like a delay. Okay. Hello, Michele. How are you?
I am great, Damon. How are you?
I'm great too. If we can get this Wi-Fi, whatever's going on, to work properly, we'll be okay. So,
Exactly.
Michele, you were Benchmark Mortgage. Tell us what's going on in the wonderful world of mortgages these days.
Okay. Well, again, my name is Michele Stringer, and thank you for inviting me on your live this Friday, Damon. Just a little bit of background about me. I have been in the real estate and mortgage industry for a little bit over 19 years now. So, kind of seen it and done it all in the real estate and lending world.
Mm-hmm.
I know one of the hot topics right now are the interest rates.
Yes.
Everyone's saying, oh, the rates are high, the rates are high. We're going to wait until the rates drop before we buy a home, right?
Yes.
But what people don't realize, especially first-time home buyers and people that have never seen a market like this, what they don't realize is that once rates do start to drop, housing prices are going to start to increase even more than what they're increasing right now.
Yeah.
Okay. Because what's going to happen is more people are going to be in the buying market, right? That's going to cause multiple contract offers on homes. People are going to start offering more. They're going to start paying cash over the value of the house, which is going to skyrocket the sales prices of the homes. So what we try to tell people to do today, go ahead, purchase today, whether you like the interest rate or not, get the house that you want today. Lock in that sales price, right? Lock in the sales price. And then once the rates do drop, refinance into that lower rate. So you're in a win-win situation. You have the house that you want at the lower sales price because you're buying today, not 6 months or 12 months from now.
Right.
And then you're going to refi and still get that lower interest rate.
Yeah.
Is that
That's
kind of
great
what you're
advice.
telling your people, your clients?
Yes, I've been actually saying very similar things to them. I already told them that once the interest rates drop, that the prices of houses are going to be higher. So they may think they're saving on the back end, but they're actually losing because of the fact is that if the interest rate is 7%, I'm gonna use that for an example. If the interest rate is 7% now, and then they're waiting for it to get down to 4 or 3%, which is 3%, the price of houses is going to increase more than 3% by the time they end up wanting to buy. And they don't even realize it. So the payments are going to be more later than what it is now. So
exactly.
But
Exactly. And realistically, Damon, and we're probably not going to see 3% again in our lifetime. Definitely not 2.
Right.
You know, we'll be lucky to get down to the 5s, possibly 4s at some point, but definitely not 3s in our lifetime. And that what I do want to say too, like what I tell a lot of, especially my first time home buyers, is that you don't know until you know, right? You don't know what you qualify for until you know. Because I have a lot of people that say, oh, I probably can't buy at these interest rates. I probably don't have enough money saved. And so my credit may not be good enough. What I do is what I tell people is, like I said, you don't know till you know. So what I like to do is run credit. Like we start the application, right? We run credit. I'll do a soft pull on clients that are on the fence and they're not sure what they want to do. I'll do a soft credit report pull. And what that means is that it's not a hard inquiry. You'll never see an inquiry on your credit report. It's almost like we're taking a peek at your credit, but we can still see your credit scores and your credit history. I'll do the soft pull. I'll still ask you to send me your income and your asset documents, things like your most recent pay stubs, W-2s, and bank statements. And once I have that soft pull plus your documents, the client and I can start talking numbers. We can determine what they qualify for today with the money they have on hand today, with the credit that they have on hand today. And if it's not what they want, we come up with a strategy to get them into a place that they want to be in, get them into that higher price point, or whatever price point they're trying to get into. And then also, if they're not credit ready, Damon, as you know, we have methods to get them credit ready so that they are able to purchase the house that they are interested in.
Well, that's good. That's good. That's very good because a lot of people don't seem to understand the process when they're trying to buy a home. A lot of people just say, I just want to buy a home. So explaining that process definitely clarifies, what they need to do. Also, can you answer this question? Like in some cases, is it FHA or conventional? But I was told recently that you don't need 2 years of tax returns if it's one of them. Is that true? Has that been changed or something?
You don't need to show tax returns?
Yeah.
Is that what you're asking? Because you're back to break it up a little bit. I
Yes.
think I heard you right. You actually don't need to show tax. Okay, go ahead.
No, I'm not saying anything.
All right, sorry about that, Damon. But I'm going to take over just a little bit. Okay. The only time we need to see tax returns is when you're self-employed, 1099 contractor, right? Or if you're using certain first-time home buying programs. But if you're a W-2 employee not using a first-time home buying program, we don't need tax returns. And then if you're using one of the more popular first-time home buying programs, which is the Maryland Mortgage Program, if you're purchasing, for the first time in the state of Maryland, they do require either 3 years of tax returns or a verification of rent. So if we can get a most recent 12-month payment history from your landlord, we still don't have to bring tax returns into the picture. And
Okay.
that's FHA, conventional VA, or USDA, any of the programs.
Okay. Okay. So
Okay.
speaking of programs, tell us about the programs.
There's a lot of good programs out here, Damon, in the DMV area, DC, Maryland, and Virginia, but I'm going to focus on Maryland for right now, right?
Okay.
So it was just announced yesterday for any of your clients that's interested in purchasing in Montgomery County. Montgomery County is giving $25,000 to any first-time home buyer that's looking to move. Well, whether they live in Montgomery County right now or not, as long as they purchase a home in Montgomery County, they can qualify for the $25,000. That's going to cover down payment and closing costs. This program was out back late last year, November, December last year, and I had a couple of clients use it. So I'm gonna give you an example. I had a client purchase a $450,000 house. They were able to use the $25,000 program through the Maryland Mortgage Program and bought in Montgomery County. Ended up coming to the table with $1,500 total out of pocket. $1,500 total for a $450,000 house. That's unheard of.
Yeah, it is. And that's
Mm-hmm.
specifically with
Mm-hmm.
Montgomery County or just with the whole state of Maryland?
That one is through Maryland Mortgage Program, but that 25K is specifically through or for Montgomery County.
Okay.
There's some hearsay about a similar program coming out in Prince George's, but that's not a guarantee. It's just gossip at the moment.
So for that
But as soon
program,
as that's available, I'll let you know.
for that
Huh?
for that program for Montgomery County, is there income restriction?
Any of the programs, all of the programs are going to have some sort of income restriction, right? But in Montgomery County, as long as you're a 1 to 2 person household, as long as you make less than $170,000, you qualify for the program. And then if you're a 3+ household, I think it's 190,000. I have to double check that, but I believe it's 190,000
Oh,
annual income, which is amazing, right?
yeah, that's good.
Mm-hmm.
That's good.
Now, in addition to that, if you're not moving in Montgomery County, if you're moving in any other county within Maryland, there's another program that will give you 5% of your sales price. I'm sorry, of your loan amount to purchase a home for the first time. So if you have a loan amount, let's just say of 400,000 purchasing in the state of Maryland, that 5% program, they're going to give you $20,000. It's not quite 25, but it's right there. It's $20,000, right?
Right.
And then there's one more program. Well, there's several programs in Maryland, but one of the other big ones is what's called the Smart Buy program, which is also under the Maryland Mortgage Program.
Mm-hmm.
Smart Buy will pay off all of your student loans up to $50,000 at the closing table. Plus, they'll give you an additional 4% of your loan amount to help you cover all of your down payment and a small portion of your closing costs. That's
Oh,
incredible.
yeah.
But the trick to that is that when the state of Maryland pays that student loan balance off up to $50,000,
Mm-hmm.
when you walk away from that table, your student loan balance has to be $0.
Mm.
So you can't have $100,000 in student loans in Maryland and pay off 50 and you still walk away and you have another $50,000 balance. Your balance has to be 0 when you
Okay.
walk away from the closing table.
Okay. Yeah.
Okay. So it's ideal for those that have 50K or less in student loan balance.
Okay. That's good to know as well too, because
Great programs, huh?
I said that's good to know too, because there are plenty of students who looking to buy. I actually have a client who has student loan debt, but they told me their student loans were in deferment right now.
Mm-hmm. Mm-hmm. Well, everyone's student loans right now are in deferment because of, the whole government situation, but they're going to be coming out soon.
Okay. Yeah, so that's good. So
Mm-hmm.
what's going on in reference to the interest rate? I mean, I threw some things out there, but what can you tell anyone about the interest rate? Those, I mean, you just elaborated a little bit on about telling people to still buy, but what about those who don't? Because I know I seen some people who basically were saying they have a great interest rate right now, so they don't want to sell their property and go into a property where they're paying a higher interest rate. What advice would you give on that?
Well, for those, because I'm kind of in the same situation, right? So you have to think about it. Those with the great interest rates that were able to take advantage of the 2.0s and the 3.0
Hmm.
interest rates during COVID, um, your mortgages are minimal. So I'm pretty sure you would be able to rent your current house out, right?
Hmm.
And make a significant amount of profit on your monthly rental to help cover the new mortgage on the new home, whether
Right.
you're going into a move up home or a move down home. So that's what I would have to say to that. And again, the interest rate is going to be temporary because they are predicting rates to come down early first quarter 2024. Not a guarantee, but that is the forecast right now.
Okay. Okay. All right.
Okay.
So let me put up, let me see real quick. Um, what advice would you give a person who actually, when it pertains to mortgages, who has a current home, wants to buy another home, but at the same time wants to take their money, some of their money out of their current home and use it for their new home?
Okay. All right. That's a great question, Damon. So I'm a big fan of a HELOC, right? HELOC stands for Home Equity Line of Credit for
Hmm.
those that don't know. So basically what that means is let's say your mortgage balance right now is 300,000, right?
Hmm.
And let's say your home is worth 450.
Okay.
So you can obtain a HELOC, a home equity line of credit, which is technically a second mortgage, right? A second 30-year mortgage on the difference of your balance in the value of your home. That's your equity. You can get a certain percentage of that money out at a much lesser interest rate than what you would get if you went out and got a personal loan or a second home loan or what have you. But you could take that money out, use that money as a down payment for the next home. HELOCs are done all the time.
Right. I
So
know they
yeah,
are.
if you have anyone interested in that, I would love to do a one-on-one with them and just explain that a little bit more, because there's also a home equity loan and a home equity line of credit. So I'd be able to explain the pros and cons of both of those.
Okay. Okay. Yeah. So I just put your information right there if anyone wants to reach out to ask any other
Perfect.
questions when it pertains to mortgages, loans, refinance, interest
Hmm.
rate,
Hmm.
HELOCs, all of it.
All of it. Anything in the residential mortgage industry, right?
Right.
And let me just, I want to back up and talk about the interest rate real quick because you just mentioned that. So people will call me all the time. Oh, what's your interest rate today? There's no way to give a straight answer for that, right? Or a direct answer for that without knowing your credit. We need to know your credit score, your credit history, your debt to income ratio. All of those play a part as to what credit score is going to be available for you. And then
Hmm.
also the programs. So if you're planning on using a first time home buying program, a lot of those programs control the interest rate regardless of your credit score. So for instance, like the Montgomery County program I just mentioned, that's $25,000. With that program, their minimum credit score required is a 640, right? So no matter if you have a 640, a 740, or 840 credit score, everyone's gonna get the same credit, gonna get the same interest rate because MMP dictates that interest rate.
Right. Yes, I always like to say that people's credit score is like their own personal DNA. It's their financial DNA. So just
Hmm.
like your DNA is not like your sister, brother, cousin, uncle. The same thing pertains to your financial DNA, because your credit, your income, and then your spending habit all play a role as far as your interest rate. Because I've actually seen people who've been approved for, let's say, bought a home for 350, and they both paid two different mortgages, and it had a
Yeah.
lot to do with their own personal financial DNA.
Exactly, exactly. Because you and I can apply for the same mortgage. Let's say I have a 640 and we're not using a program, right? Let's say we're getting a $400,000 house. I have a 640, you have an 840. I may be paying for that $400,000 house. I may be paying $2,800 a month for it, and you may be paying $2,400 a month for the same house
Right.
because you have that better interest rate.
Right. Exactly. Yeah.
Just as an example.
Great example, because people need to understand it. Because I also share with people that's just like when they watch TV and they see a commercial to talk about, oh, you can get this car for 0% interest rate, or you can get this credit card for 0% interest rate. But then when they go to the dealership, they drive off with an 18 to 20% or 22% interest rate. And it all had to do with their credit. So the latest interest rate, regardless if it's mortgage interest rate or a credit card interest rate or a car interest rate, is always going to be contingent upon that individual and their DNA, their financial DNA, their
Hmm.
credit scores, and all of that. So, yes, and people do need to really understand that, because when people are talking about the interest rate, what's the interest rate? Like you said, it depends on their situation, is going to determine what their interest rate is, because everyone's interest rate is not the same.
Right, right. And I just want to reiterate again, like you don't know what you can do until you know, right? And the
Mhm.
only way to do that is for us to pull credit, collect your documents, and let's have a numbers conversation. And don't be embarrassed if you have any first-time home buyers watching. Don't be embarrassed if you don't know where your credit is, or if you think you may have low credit, right? I've seen it all. I've seen the 800 credit scores. I've seen the 400 credit scores. I've seen the NA credit scores. So if you
Mhm.
don't have a credit score, if your credit score is that bad, you may have an NA. You may not even be on the credit score chart. I've seen it all. So there's no judgment here. We're here to help. We're here to hold your hand. We're here to help lead you into the right direction with any assistance you may need, whether it's strategy, whether it's credit, whatever it might be.
Let me ask one more question. So, if a
Mhm.
person doesn't have any credit score, is that worse than having bad credit score?
No, no,
Okay.
no. So there's someone out here with absolutely no credit history. Now
Mm.
it's a difference because some people may have no credit score because they have 50 million collections on their
Right.
credit report.
Mhm.
That's bad, right? But if you have no credit score because you've never had any credit, that's the easy fix. It's
Okay.
just a matter of going out and getting one or two secure credit cards and slowly building your credit. But that's the one-on-one conversation I would have with someone in that situation.
Well, that's good to know, because I remember before I got into real estate, over 20
Mhm.
plus years ago, and I remember I was going to buy a house with my first wife, and
Mhm.
I didn't have any credit score at all. And the
Right.
guy and they were
Right.
like, that's worse than having bad credit. But I
It's
had
not.
the income. I had the income, I had
Right.
everything else. And
Right.
she didn't have the income, but she had the credit score. So back then it was
Mhm.
totally different, because one person had
Right.
the income and everything. So when we bought our house, it was based off my income and her credit. So it was a whole,
Mhm.
but things have changed. And that's why I always tell people to speak directly with a mortgage loan officer, because the mortgage guidelines have changed so much over time. Just like when I'm mentioning right then, when I went to buy my first house, I recall, because I didn't have credit score, and they said that was worse than having bad credit. But like, she had the credit score, but I had the
It's not.
income, so we bought that. I'm saying, I know, but what I'm saying is, though, things have changed. I wasn't in real estate then. This was like over 20
Right.
years ago.
Right.
So long story short, but I'm just saying, hypothetically now, a person like you can educate them on the process, especially if
Mhm.
there is someone out there like how I was, who didn't have any credit but had the income. So like you said, that's an easy fix. So, just being
Right.
educated on certain things will help people to move in the direction that they want to move in.
Right, right. And that's what we're here for. And I just want to mention one of my last remarks. We have something here at Benchmark. We have something called the Wealth Lounge. So for those who need some credit help or need a little bit of guidance or need some extra hand holding, we have a process and we have a team that will literally walk you through getting into a better financial position in
Mm.
every aspect. So
That's
don't
good.
hesitate. I mean, I would love for people to give you a call first. If anyone's interested, give you a call, just touch bases with you. Let them let you know what they're interested in doing, and then you can connect them over to me.
Sounds like a great plan. Well, I thank
Mhm.
you, Michelle, for coming
You're
on and
welcome.
answering these questions. I'll be in touch with you very soon. And
Sounds good.
I hope you enjoy the rest of your day.
You do as well, Damon. Thank you for everything. Take care.
You're welcome. Talk to you later. All right, you all. That was Michelle Stringer. Have her information right there at the bottom floating. She's with Benchmark Mortgage. She's been doing it for 19 plus years. I've been doing real estate for 18 years. We're right around the same. She's just a year before me, but she's very experienced and has a lot of insight on things when it pertains to mortgages, questions, anything. So, it'd be a great idea to give her a call if you have any questions. I put her information there. You can call me also if you're looking to buy. But I wanted her to come on just to talk briefly about those things because, sometimes it's always good to hear from the professional who specializes in certain areas, because like me as a realtor, I'm very knowledgeable about a lot of things when it pertains to mortgages and, home inspections and, title work and everything else. But our primary job as mortgage real estate agents slash brokers is to sell and help find people houses and everything. We don't specialize in all that. So it's always good to have the experts. So I always like to have professionals to come on to talk about certain things that would definitely help you all for those of you all trying to make a decision and you want to make an informed decision. That way I bring these people on so you can get clarity and you can hear from the professional. So let me do my recap. Okay, you all, today I talked about reverse mortgages. Um, I explained that how to sell a house using a reverse mortgage. Now, I explained that it still can be done. There are plenty of people out here who have reverse mortgages, and a reverse mortgage is basically supplementing the income from people who need it, because of Social Security, because of home repairs, because of medical expenses. Reverse mortgages when you have equity in your home, you're 62 years or older, you have equity in your home, and you need more money. So, mortgage companies would do that if you have the equity in your home and they'll start to pay you. You don't pay a mortgage. But at the same time, it diminishes and takes away from the equity in the home. So if you try to sell later on, all of those payments will be added on. But for those people who, unfortunately, parents or whomever have passed away and they want to sell the property, you still can sell. It's always best to know what the balance is, to know how much the house is worth. Sometimes it may seem like a little headache, but if you hire a professional such as myself, we deal with majority of everything. You just have to sign off on things, provide us with certain information that we ask for, and then we can try to make sure that also get a profit and you benefit from the sale of that home. Otherwise, the banks are going to take that home after a certain time and they're going to turn around and resell it for a high amount. That's when it goes on the market as a foreclosed property, and people are like, "Oh, I remember such and such was in that house," and then you see that the house was sold for a certain amount. And you're like, "Oh, dang." But either way, you can always sell your home with a reverse mortgage. And please, everyone, follow me on all of my social media platforms: YouTube, Instagram, Facebook, LinkedIn. Am I missing something? Twitter. Twitter, and TikTok. Follow me on all of my social media platforms. The hashtag is always Damon the Agent. So if you're looking for me on any of those platforms, just type in Damon the Agent. I'm there. Please follow me. I appreciate you all. I thank you all for joining me each and every Friday at 12 noon. And I want to say I hope you all have a great weekend. Time is flying, y'all. We're in August already. Next thing you know, it's going to be football season. And the next thing you know, people are going to be complaining and fussing about their favorite football team, but that's a whole nother discussion. You all have a great weekend. I'll see you all next week.